The only source of knowledge is experience. Albert Einstein. Is that not a fascinating quote from a theoretical physicist? The only source of knowledge is experience. Well, we give you experience here every day, 10 to 15 minutes, charting the markets, helping you understand the importance of weekly vertical crossovers. Not a single one has failed us this year. That's how accurate they are. And people say, how is that, Tom? How does that work time and time again? We talk about the big wave. The weekly wave is the biggest wave that we chart, and it works over and over and over again for us. Why? Because these big waves are a function of the 4-hour and then the 2-day, and then when there's enough movement and enough of a wave, it pushes things through. And people say, but look, Tom, if we look at the screen, and those of you who are listening to our popular podcast, I'll tell you what we see. We look at the S&P 500. It crossed over going up back on the week ending the 8th of May. Now, it had already been going up 1, 2, 3, 4. This was the 5th week. And you might say, why didn't you get in earlier? Because we didn't have the crossover. And you can go back in time and you can see where you can get faked out. You can see these places where it happens and where it looks like it's going to cross over going up and then bounces off and goes down. But when that crossover occurs, it invariably gives you enough time to make a successful trade or trades. And again, that's why we use all the charts all the time, not only the weekly, but the 2-day and the 4-hour. Remember, it's those two primary bigger charts, the 2-day, when we have a recross going back in the same direction as the weekly, and that weekly. And it's the weekly that over and over again has been working for us. Now, is it always that way? No, you can look back in time and you can see where the weekly has gotten squirrely on us, but it's really hard to find it. I'm going all the way back to 2017 in June. It got squirrely there and looks like it probably didn't work. That was 2 years ago. Okay? I tell you guys, not everything works. Well, not everything does. I mean, nothing's perfect, okay? We're not prescient. We don't have absolute knowledge. We are not God. We don't have a God's eye view. But we do have a trend, and that is beautiful. Now let's jump into these charts. Everything up for the day. Everything. I mean literally everything. From gold to bonds. I mean, not bonds. Bonds are the only one that's down. Gold, real estate, Bitcoin, S&P 500, Nasdaq 100, and of course, what do we have our weekly vertical crossover in that occurred recently? That's bonds, down 0.81%, was down even more during the day. Let's jump first in the S&P 500. We see it up for the day 0.41%, even after the riots and all the insanity, still going up. It's not reached a higher high yet. Last week, the high 306.85. 305.90. We'd like to see it. Of course, we would like to see it reaching a higher high as the week starts. You can see that reflected a little bit in the derivative oscillator. It's barely higher than it had been, but that price percent oscillator is still moving up nicely. That's a good sign. 2-day chart. Again, we can see that last 2-day candle was on Friday, so this is the first day of the latest one. Still not reaching a higher high, but price movement well above the weekly and above the 2-day. Price percent oscillator heading up. Derivative oscillator gaining upward momentum. 4-hour chart's flat. We see up movement in the morning and the afternoon. That was after 2 days of sideways, 1.5 days of sideways down movement, Thursday afternoon through Friday. So it's good to see things trying to recover there, at least on the short chart too. We're going to leave the S&P, go to the Nasdaq 100 as represented by Q. What do we see there on the weekly chart? We see 234.45 as the high. That is higher than 233.60, so we did reach a higher high, price above the 2-day and the weekly. Price percent oscillator heading up, derivative oscillator about flat. We look at the 2-day chart. We see it, first day of the latest candle, above the 2-day trend line, well above the weekly. Price percent oscillator edging up. Derivative oscillator heading up 2 on the 4-hour chart, up in the morning, further up in the afternoon, crossing over, going up in the afternoon, which is good to see. Okay, that's where we are on the cues. And again, you did just see that 4-hour recross. That is our weakest link for jumping in, but that's a possibility with that caveat. Okay, now let's go to TLT. Beautiful. Had that crossover going down back on the 22nd. I know a bunch of you jumped into that. We saw it somewhere around, again, I'm using the Heikin-Ashi candlestick, so it's not the most accurate call, but 164.64, the low 162.12, no, the low 161.67. So that's not bad going into 6 days of down movement. That's pretty good, isn't it? We see the derivative oscillator gaining downward momentum, price percent oscillator heading down, 2-day chart. Same thing. First day of the latest 2-day candle heading down below the 2-day and the weekly. That's good to see. Go to the 4-hour chart. Down movement in the morning. Bit of a recovery in the afternoon. Bit of a slowdown in the down movement. It moved up a little bit, I guess we'd say. Derivative oscillator losing downward momentum. Price percent oscillator less than flat heading down. So again, we were down 0.80% overall. Did go lower during the day, so that's good to see. Now we're going to go back to our weekly chart. Remember, always start with the big chart, work your way down to the smaller chart. We never use more than 3 charts. Why complicate things? You got 3 good charts in varying time periods. Use them. Do they have to be the weekly, the 2-day, and the 4-hour? No. That's what we chose and have stuck with because it works for us. You come up with a better way, use it. We're not stuck to anything here. I only want to do what works. My orthodoxy is success. That's all. So what do we see going on gold? We see the price percent oscillator actually heading down a little bit, still positive. Derivative oscillator losing upward momentum. Price hit a high on gold at 164.96 back on the 22nd. 163.74. Hasn't hit that now after a week, a red spinning top last week. We do have a green up candle that's forming. That's good to see. Want to see it hit a higher high. Derivative oscillator and the price percent oscillator losing momentum are reflecting the fact it's not doing that. 2-day chart still negative. Now notice weekly's in a confirmed up move. 2 days in a confirmed down move means we don't have a trade in gold. One's going to have to give. Either the 2-day is going to cross back in the direction of the weekly or the weekly is going to cross over in the direction of the 2-day. Either way, we don't care. One's a 2-day recross going up where we get in going up. The other's a weekly vertical crossover going down and we get in going down. When they conflict, you do nothing. Remember, first rule of trading, don't lose money. Second rule of trading, make money. Never forget rule 1. Never forget rule 1. It's easy to deal with making money. You will get busted losing money. Here we're talking about virtual trading. That's why you virtual trade for months, years, however long it takes until you figure it out. We're not a stock calling service. We're an education firm. What do we see going on the 2-day chart? Like we said, price percent oscillator heading down. Derivative oscillator, let's zoom in a little bit, losing some downward momentum. We go to the 4-hour chart. What do we see there? It's heading up. It has been heading up actually for 2 days now, so that's good to see. Again, we'll see which way gold finally figures out what it's going to do. Folks, that's where we are. Thank you to all the Canadians been ordering our books lately. We've been shipping your books to Canada. We appreciate everyone joining us. I've got more charts to go through. Those are the 4 big ones we do. I'm also going to cover Bitcoin, real estate, which, hey, how do you like that weekly vertical crossover in 1 day? 2.31%. Not bad, huh? And we're going to cover black gold, oil. I love to call it gold, but I'll try to remember to say oil. If you hadn't ordered our book, the 2nd edition of Charting Your Way to Wealth, we have a copy, autographed copy for you. Live overseas, email me, cw@chartingwealth.com. We'll send you a PayPal invoice, pay it, send your book to you wherever you are in the world. If you live in the States, look for the link in the show notes. Whichever show you're listening to, whether it's iTunes, YouTube, you get the email. However, it's there. So look for the link. You can buy it at our Square page. We'll get it to you. Don't forget, we also have spiral bound 3-month quarterly versions of our daily market worksheet, weekly market worksheet, and trade worksheets, all spiral bound in a quarter for you. If you would like those, we also have those available. You can also just print them out. We have the PDFs in the show notes for your daily market, weekly market, and trade worksheets. Also, don't forget, this is part 2 of options made simple, the Charting Wealth way. Let's jump back into these charts. As we jump into them, Patreon members, remember Wednesday, 12:30 Eastern Daylight Time, we have your live Q&A call-in training session. This week, look for your email. If you're not a member, sign up. You'll be able to join us this week. Okay, what do we see going on? Well, Bitcoin up 1.29%. Now again, price percent oscillator heading up, derivative oscillator losing a little bit of upward momentum. Remember, Bitcoin hit its high back on the week ending the 8th of May. That's the first high. That's the highest high it's had since it started its precipitous decline somewhere around the $10,323 mark to a low of $5,118.94. Hit a high back on the week ending the 8th of May. Like I said, $9,978.98. It has hit a high so far since then of $9,558.52. It did that. Let's see, is that the highest high? Well, it actually had gone higher the following week. But what we see so far this week is the high was that 95.58.52. Price percent oscillator is heading up. Derivative oscillator is losing a little bit of momentum. Go to the 2-day chart. 2-day still positive, a little bit less than flat, a little bit more than flat. Just trying to move up. We see the first day of this latest 2-day candle, a green up candle. Look at that derivative oscillator, though, still losing upward momentum. Still green, but losing it. 4-hour chart. Did you guys catch this? It is the 4-day recross. Tried to do it in the morning, just not enough energy. Did manage to do it in the afternoon. Did any of you initiate a Bitcoin trade based upon that? A practice trade this afternoon toward the close of the market. Did you? Because we have been talking about that for many days. Finally seeing that come to fruition now. It is our weakest method of entry. The best is always the weekly. Always the weekly vertical crossover. 2-day vertical crossover, or what we call a recross in the same direction as the weekly, is not as good as the weekly, but it's typically good. 4-hour, always much riskier. But if you wanted to practice trade Bitcoin, that was a possibility. So that's where Bitcoin is, up for the day, 1.29%. Let's go to real estate. Victor, November, Quebec, which is the Vanguard Real Estate Investment Trust Exchange Traded Fund. Remember when we told you had a weekly vertical crossover back on the 29th, the weekend? That was last Friday. Talked about it, told you it was coming. It happened. Closed somewhere around the 76.89 mark. And what was it up to today? A high of 79.79. Is that not beautiful? Is that not absolutely gorgeous? I'd say that's pretty gorgeous. So up about $3. Not bad in a day. Now again, that was a weekly vertical crossover going up. So hope you might have practice traded that if you're interested in real estate. 2-day chart gaining upward momentum, price percent oscillator heading up, derivative oscillator heading up, candle reaching a higher high than the prior candles over the last many weeks. That's nice to see. Look at the 4-hour chart. Up in the morning, further up in the afternoon, reaching a higher high. Those are good signs. That's good to see. So again, we'll keep tracking this, see how real estate continues to do. What about USO? Oil. What's oil doing? 1.58% up for the day. That price percent oscillator is ever so slightly moving up, still negative. Derivative oscillator went positive last week, just barely, and gaining a little momentum. We just see little bitty green candles, but they are green open box candles, which is a decent sign. 2-day chart rotated over, going up back on the 19th, and is really sliding sideways, trying to get up to the high it hit back on the 21st of May. So we'll see just how that continues to go. 4-hour chart, it crossed over going down actually in the afternoon on Wednesday of last week, the 27th, and sort of bottomed out there on Friday morning and has been going up the last day and a half. Hasn't crossed over going up yet. So we'll continue to watch, see what there is to see in black gold, or as it is known, oil, and see if and when we're going to have that crossover on the weekly going up. Folks, that's where we are as we end the day on Monday. Promises to be an exciting week. What is this exogenous event that is occurring right now? How will it affect the markets? Of course, the exogenous event are all these riots, cities burning, crazy stuff happening. The coronavirus still out there, although it's sort of second in the news now with all the protests or looting or whatever you want to call it. So let's watch, let's see, let's let these charts lead us. Remember, follow the charts, not the noise. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. We're here for you every day.